Congratulations, I guess, is in order. You have done so much work at Lloyds to get to this position. But you always talk about the fact, and I've heard you sort of, and I've seen you in interviews talk about the fact that there is more to do, to quote from you.
That's right.
Should the government have waited? Are there more great things to come? If you're a pragmatic shareholder and you think that actually things are getting better, hold on for a little bit more.
Well, there is lots more to do, but I personally don't think that governments should be shareholders of banks.
Right.
This was a bailout which was required not only from Lloyds, but also RBS, Northern Rock, Bradford Bingley at the height of the financial crisis. Taxpayers' money was used because it was a major crisis, but taxpayers' money should not be used to bail out banks, and taxpayers' money has many better uses to it. So I think the government did well in selling their shares. They used a good plan. They sold every day a part of the daily float. So progressively, they diversified their sales through 3.5 years. They got their money back, £20.3 billion, and still around £900 million more than what was put in the bank. So I think they did the right thing.
It must be a day of great pride for you personally.
Yes.
You came into this institution, there was so much to do at that point, and you've cut costs, delivered growth, taken the bank onto the front foot from the back foot. From your point of view, personally, is it job done?
Well, not at all. As I just said, there is always more to do, and we have lots of plans for the future. But your question, I would like to just put it into perspective. When I arrived to the bank 6 years ago, the bank had £200 billion of toxic assets from the HBOS acquisition, a third of the loan book. On the other side of the balance sheet, it had £200 billion as well of net debt that was funding these toxic assets, half of it short-term debt, very cheap, but very dangerous, just
also,
before the Eurozone crisis. And today, 6 years on, the bank has zero net debt. We sold all the toxic assets. We have a core tier 1 ratio of more than 14%. We are the safest bank in the UK with the highest capital level and one of the safest banks in the world. So it is a big journey. But our purpose now that we are completely with the right financial structure is to help the country prosper. Our purpose is helping Britain prosper. We are the largest bank in the United Kingdom in retail and commercial banking, and therefore what is good for the economy is good for Lloyds. It's a very clear and very easy strategy in that sense. What is good for the country is good for the bank. That's why me and my teams relentlessly pursue what is good for the real economy. We help first-time buyers, small and medium-sized business, and we relentlessly will continue to do this.
So that includes you. So you're
it includes me because I think this is all a teamwork.
Right, so you're going to stick around. This isn't, as I say, this could be job done for you. You've taken the bank back into...
This was one of the big milestones we had. I publicly said when I joined the bank 6 years ago that I would want to give taxpayers money back and more than what they had put in. This is done. It's a big milestone, but we have much more to do. So to give you 3 examples, we have to finalize the acquisition of MBNA, so the credit card business we bought from Bank of America. It's 11% of the UK credit card market. We have to close the transaction, deliver the synergies that we promised to shareholders. Secondly, we have to continue digitizing the bank. We were the first of the global banks to implement a digital division at the top of the bank with the head member of the Group Executive Committee to absolutely functionalize the bank, digitize all the customer experiences. We have now to continue doing that and digitize the bank internally where there are significant synergies there. And to give you a third example, we have to start preparing our third strategic plan for the period 2018 to 2020, which we will start preparing in July and present to the market in the beginning of next year.
Just to confirm, you are absolutely committed to this institution. It is no way in your thought process at the moment that you're going to think about doing something else.
As I just told you, I'm very happy at Lloyds, very committed to the bank, and we have lots to do.
Cost-income ratio, you've done a tremendous amount on cost. Cost-income ratio, I think, is 47% at the moment. Where would you like that number to be?
Well, number one, I think cost to income is a key driver of retail and commercial banking.
Yep.
These are very competitive markets. We have digitization, so the more efficient we are in the sense, the more we diminish the intermediation margin, the better we serve our customers, and at the same time, the less incentive there is for players to come into this sector. So this is, I think, a major thing that banks should do. And it is true, 6 years ago, Lloyds was number 3 out of the 5 UK listed banks in terms of cost to income ratio.
Yep.
Now we have a 47% cost to income ratio, the best in the market, when the average is between 60 and 65%.
Yeah.
And we use that difference every day, relentlessly, to both invest more for our customers and to have the required return for shareholders, which also enabled us to give taxpayers money back and some more.